Hey everyone, welcome back to Corporate Decoder. Today we're diving into MakeMyTrip's latest annual report. Usually these reports are dry, but this one actually mentioned an airline being liquidated might affect business, so maybe it'll be exciting. Before we jump in, if you're interested in getting more direct insights from this channel, then be sure to join our brand new Discord linked in the description below. You can discuss with other smart investors what you think of MakeMyTrip or any other public company really. The headline, MakeMyTrip, the travel giant you might know, for booking flights and hotels in India, had a profitable year after some really tough times. Think cancelled flights were going to stop them. Think again. But let's get into the details to see if this travel company is really set for long-term success. First, let's scroll to their official document and see we're in the right place. To MakeMyTrip filed their annual report with the Securities and Exchange Commission, or SEC, on June 16, 2025. This is called a 20F filing, which is what foreign companies use to give US investors the lowdown. The report covers MakeMyTrip's performance for the fiscal year ending March 31, 2025. Remember to check for those type of things. Some companies are tricky with their financial years that don't align with calendar years. Now, this report is very important because the company is not based in the US, so it's hard for American investors to keep track of what's going on, and this annual report should shine the light. But it's important not to trust these filings blindly. We will check the raw numbers and try to understand how the company is doing despite their marketing. One key thing to note from the start, MakeMyTrip repurchased some of its own shares last year. They bought back 1.2 million shares at an average price of around 440 cents. Buybacks can be a good way to return money to shareholders, but let's see if the company is making smart moves overall, or if they're doing PR moves to pump the price while the company's performance slowly drops. This is a thick document as expected with these filings, so let's move fast. Now, a lot of the performance is tied to the Indian rather than the US economy. So there is expected to be a lot of reference to it, and the currency can fluctuate. So let's pay careful attention to the currency fluctuations. One major risk is the impact from events in the travel industry. Events like strikes, accidents, or even just fuel price changes can mess with the business. Also, things like terrorism or political conflicts may affect where they operate. A big risk in the travel industry is relying on other suppliers. So if the company aren't able to get arrangements with big suppliers, as well as renew agreements, then it can affect the numbers, particularly if this results in lower compensation. So as in the past, MakeMyTrip will need to keep spending on marketing and sales. The problem here is that while that might keep them in the game against competitors, it also means they might not be able to turn a profit or increase said profit despite the marketing. They say that it is possible that breaches or disruptions could compromise confidential information or third-party data. That could lead to losses, potential penalties, and a plunge in customer trust. Data privacy is also a big issue now, with new laws in many countries, including India and the USA. So they may incur increased compliance costs, and any failure to comply may adversely affect their business and results of operations as regulations continue to evolve. Trip.com, a major shareholder, has a lot of influence, which could mean their interests don't always line up with other shareholders, which could delay or prevent action from occurring. Now that that's a wrap with risks, let's get into the more juicy details. The financials as of March 31, 2025, they had 71.5 million regular shares and 39.6 million Class B shares outstanding. Before we get into the numbers, there is a section to understand the accounting measures used, as there are some non-IFRS measures such as adjusted operating profit loss, adjusted diluted earnings loss per share, and constant currency results. Here, let's scroll to it and view the reconciliation of IFRS indicators. This will be important in figuring out their true performance. Keep in mind some disclaimers with this business, such as that it's affected by seasonality, summer and winter breakups, for example. So it's key not to evaluate numbers that might not give a full context. Also, the performance will be affected by the relation to the Indian rupee, since their functional currency is rupees. The performance is obviously not dollar to dollar if it's also not rupee to rupee. The currency might play a big part, so any analysis has to take account of such fluctuations on their real performance. It's all going to be measured up as the equivalent in USD. Let's dive into the numbers. Total revenue, $593 million in 2023, jumped to $782.05 million in 2024, and then $978.3 million in 2025, which shows how it rose by 30% every year since the previous years, suggesting the company is growing. However, if it's only being attributed to traveling recovering from COVID as they say it is, it might mean it could drop again. As a little note for investors, a potential thing to keep in mind is that the company's ordinary shares are on the Nasdaq exchange, but the functional currency is the Indian rupee. They calculate financial performance based on adjusted margin, a non-IFRS measure, which appears to show how much value they add. Their numbers can change because the Indian rupee fluctuates, so any analysis must also check the rupee trends to see if they're affecting financial performance and make sure it's not related to other fundamental problems of the business. A huge risk they face is potential suppliers dropping commissions, meaning that while volume can go up, earnings remain static. So these numbers are definitely needed to be dug into carefully with future prospects in mind. So MakeMyTrip has been running cash incentive promotions, which are also very expensive, with no promise for real loyalty and potential for customers bouncing anytime to wherever the incentives exist. Etsy, now having gone through this document, what's my take? MakeMyTrip is at an interesting crossroads. While they are experiencing robust growth post-COVID, sustained success hinges where they choose to spend money, as some areas may not provide long-term value while costing the company significantly. So one thing they have going for them is that they already understand the market in India, having worked in it for a good amount of time. The leadership appears competent, but so much dependence on an economy that may have some fluctuations, or worse, trade disputes to other countries may put them on a rocky situation. But they are getting into new economies and geographies such as Thailand and the UAE, which could diversify them and hedge from a purely Indian economy. Furthermore, it will incentivize people to book both domestic travel and travel to places such as Thailand. They do need to spend some serious time in seeing which market works for them and push the successful regions harder. So in conclusion, I would be bullish about them only if they show more commitment towards solidifying existing business rather than running around throwing money to any growth scheme that is placed in front of them. As such, I would not personally invest in MakeMyTrip. As mentioned before, if you feel like I've missed anything during the analysis, please feel free to discuss in the Discord. I can't catch everything after all. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below. Thanks for watching. See you next time.